What's going on, guys? It is Sunday, May 16th. I just spent 45 minutes going over this, only to realize I did not hit the record button. So, we'll see how this works out. I have checked. I am recording. You guys are going to get to see this. But as you can see, there's already some stuff on my screen that I went over, and I'm going to go over it again. So, we talked about qualifiers last week. We talked about legs. We talked about levels. We talked about what makes a leg, what makes a level. So after that, everybody kind of had questions just to make sure where qualifiers come from, where do we take trades from, how do we come up with targets. Those are all valid questions, and we're going to answer them today. And I'm going to try to answer them more succinctly than I did last time because I kind of only allotted myself about an hour today to do this, and I just spent 45 minutes talking to myself. So let's do this again. All right, so I'm going to go over this drawing. It has a lot of writing on it. Yeah, and I'm going to start from the beginning. So we have our leg up here and a leg down. We will assume it broke support to the left. Our qualifiers come from our legs down and our leg up, but it is a resistance in a leg down and support in a leg up. Now, somebody asked, which leg do we get our qualifiers from? Well, you're always going to get a qualifier from the leg you're currently retracing. That's where it comes from. The difference is you want to be able to put two of those legs together in order to have three valid legs. The one you're in, the one you're retracing, and the one that gained or lost. Those are your three legs. So in order to have valid three legs, you need to have two qualifiers. So we'll have every time, without question, you're going to have a qualifier from a leg up and a leg down. In this scenario, here's your qualifier from your leg up, or from your leg down, and here's your qualifier from your leg up. We broke this, we broke that, we made new highs, we have three legs. Ta-da. So within this, there's a lot of different trades. There's a lot of different things you could go over. This diagram really can explain everything we do. And I attempted to do that, and I'm going to attempt to do it again. So we broke this green line. That's resistance in a down leg. Qualifier. This qualifier broke support to the left, which makes this red line a failure long. Where do we take trades from? We take trades from last and lowest and last and highest. And what I say by last lost or last gained, it was the lowest level on a leg or the highest level on a leg before we extended it. And the lowest untested and highest untested we'll go over right now. So from here, we broke this green level, activates this red level, this level of support in gray is what broke green to the left. That's a qualifier, but it also broke blue in the immediate. So this is a failure short. After we get below gray, blue is also support in the leg up. It got above green here, which is valid because of green here. And we broke below that there, so we have failed to gain this level, failed to gain it as support, and we have failed to lose, or now we have lost this level as support, and it should become resistance. Now the move that broke this blue level is this purple level. So we need to get above here in order to start back up our leg. And that will leave this black level, this yellow level, this blue level, and this green level. These are all valid levels. So once we extend to new highs above purple, because these are valid legs, this makes three legs, we're trying to figure out where do we take a trade. So this blue line, which was our failure short, would be our last gained level. Meaning that's the level you're going to take if it's momentum or if it's the lowest untested. That's where the rules come in. Now we also have this black level and this yellow level. The keywords are lowest and untested. Now, the rules say a level is activated after you get above the move that broke it, or below the move that broke it. But that's not the rule as it pertains to whether or not it is tested. So here, this black level is a valid failure long because we broke blue support. In order to activate it as a valid trade, it needs to get above purple. Above purple, back test to black, that's a valid failure long trade. However, in this scenario, we tested green, which is a valid failure short, and it went to black and rejected and went higher. So when we come back down, this black level was used as support on this move up. So it's not tested, or it is tested, not valid as a trade, even though it wasn't activated yet. Yellow, support, resistance, not tested as support, so it's valid. Green, resistance, support, resistance, more context. Not used as support again, valid as a level. Blue, resistance, resistance, not used as support, valid as a level. All three of these levels are valid. So which one do you use? Now, I just spoke for 45 minutes, so forgive me if I take a sip of some water. All right. Blue, in this scenario, would be for momentum. This is something you're going to gauge with experience, because when you look at a stock or anything, you'll notice, like Moxie here. I went over this on Friday. I'll go over it again in a minute. It likes to make new highs and pull back, make new highs and pull back. It doesn't do new high, test last gain, and take off like over and over and over again. So while this is a valid trade, this blue level on something like Moxie, it's not your biggest trade. It's not your highest probability trade. It's not where you want to put your foot down, draw a line in the sand, and say, this is where I'm buying and I'm not selling. Lowest untested is where you want to do that. So in this scenario, it's green or yellow because they are lowest. They are not tested. Black is tested. On a tick chart, you can guarantee I am taking this green trade every time. Not going to worry about yellow because these are probably ticks apart. So do you want to be that guy that misses a 100-point trade because you were trying to get a 1 point better fill? On a weekly or daily chart, you might want to take a look at zooming in on the right, see what's more valid. You might want to look at this area over here and say, are there 3 legs over here on a smaller time frame? Kind of give you an idea of where you want to place your trade. And sometimes you can just wait for a failure trade to develop after testing one of these. Those are all valid options. But your trade, your primary trade is going to be coming from your highest and lowest untested levels. So if we flip this upside down, it's the same thing. This would be your momentum continuation short, and this green and yellow would be your untested, your highest untested failure trade. Or really, this is a continuation short. This is a failure short. This is a continuation short. But this is where your bigger trade is going to come from. So that's where we find trades from. Now, we also have to worry about tested and untested. I gave you an example of that with this black trade here. There is another good example of that. Let's zoom in. There's another good example of that right here. Oh, don't want to do that. So let's clear all this out. We've got our legs here, and I drew this here because we draw legs from last gained and last lost. So in this leg up, we last broke this qualifier, and then we made new lows. So while This is technically a leg in itself from here to here. It is not leg 1 of this move. This is leg 3, leg 2, and leg 1 would start where we last gained, which would be this qualifier. So this is valid, it is a leg, but this is how we compartmentalize and segment legs. So this is its own 3-leg setup here. Anyway, in here we've got our failure longs and failure shorts. So we've got this level, this level, this level, and then longs. So we're going to work on tested here. Tested versus untested. So we know that this failure short is activated below the move that gained it, which is below here. This move right here. We have not done that yet. But on the move down, we already use this as resistance. This is a test. This is no longer untested. From here, we've got this level. You could argue that it was used as resistance here. That's kind of questionable, but technically it's tested. It hits here again. This is something you don't get frustrated over. This was a test right here. This is not a trade I would take. And you notice, so we've got resistance, kind of acted as resistance right there, resistance right here, resistance right there. All of this is tested. What you want are fresh, clean, untested levels. So when we got above this level, it activated this one right here, but it was already tested here. This is not a valid trade. While technically this is a valid level, this is not a valid trade because it's already tested here. Now let's do an example of lowest and highest untested from the move on Friday. So we know this move, well, I'll just go through the motion so you guys can see it. We know this move broke support over here. You zoom in, technically you've got support here and here. We broke it. So this is a valid move. We have broken support. Then we broke resistance that broke support, so we can reverse. And remember, this move altogether is from the daily chart way back here. Okay, so this is where we're getting our bounce from. So let's zoom in. Now this itself is a leg. 3 legs right here. This is where we can use tested versus untested. So we know, let me move this for a second. We've got failure levels right here that are tested, right? Because we popped up, came back down, tested as support, took off. And we know failure levels come from inside 3 legs. So we've got, here's where all of our levels come from in this 3-leg scenario. We've got resistance here, here, and here. And then support there. Continuation longs, failure longs. The answer to whether or not you want to take a trade, or the question to being, where do you take a trade from? The answer is lowest and highest untested. Sorry guys, I already did this for 45 minutes. Now I'm totally lost. So 1306, 13.022. this is tested right here and here. Those are not valid. So really our primary contenders for a level are 22 and 06. Which one's lowest? 06. Here's where our bounce comes from. Now, in this move down, we last broke support here. So this is the level we need to get above in order to continue higher. And this is where we can talk about targets. When you hit a lowest untested or a highest untested, your primary target is, if you hit lowest untested, your primary target's highest untested of the move you're retracing. So when we come down here and we hit lowest here, our primary target is highest of this move. How do we figure out highest of that move? Well, we look at our failure trades. And this is why I will always harp on support and resistance over and over and over again, because it tells me where I'm likely to have valid levels. This is not the highest untested level, but it was very clearly resistance and then support multiple times, and it was not tested as resistance again. So you are going to find sellers here on the next visit, and you did. So highest untested technically is right here. It was untested. So our target from here is here, because this is the move that brought us down. Moves in the middle are valid, and that's how you can be stopped in your tracks and not actually reach your target. Is you can hit a level, lose last gained, which you did right here. Actually, yeah, you got above here with this move, you lost support there. So what you had to do was make a new 3 legs. And this is funny, the price action here kind of sucks because it's going into the 4 p.m. close and the 6 p.m. open of futures, so don't mind this, but still it works. And then you've got these levels here. This would have all been tested. And this is where we need to talk about recency bias and tested and untested. We clearly have untested levels here, and they work. That's fine. I'm okay with you getting recency bias with untested levels because that's what should happen every time. It's not going to happen every time, but it happens most of the time. Now, when you see a tested level, like we have here, still get a reaction here, your brain wants to say, maybe that wasn't tested, or maybe I have the idea wrong. But your brain also doesn't register the 50 times it was tested and on second test you blew right through it. You don't register those because your brain doesn't pick up on an anomaly. It doesn't realize, it doesn't see that something out of the ordinary happened. So it just goes, you subconsciously you think that's supposed to happen, not worried about it, doesn't register. But recency bias will tell you, hey, look, that worked. Was I wrong? And then you hit this spiral of getting things really twisted in your head, and you start to feel like you don't know anything, and you take 5 steps backwards, all because you didn't trust your process. If it's not clean, it's not free. If it looks tested, leave it alone. There are plenty of trades that are untested and are clean every day. If it's tested and it works, who cares? Move on. Pay attention to it because it's still a valid level, but don't trade it. It's okay if some market does something without you. We're not here to be right. We're here to make money. So it's okay if you're not right about everything. All that matters in the end is we're making money. So I don't want you to get caught up in recency bias. I want you to realize that things happen. It's okay if something's tested and it still works. It's okay if there's an untested level that gets left behind and you were sitting there waiting, hey, I'm going to take a trade from here, and it never comes and fills you. That's fine. That's what the market does. It leaves untested levels for later. That's how we get bounces and rejections. We're hitting untested levels from prior price action. It's the whole thesis of how we trade. So our key takeaways are we want to trade from highest and lowest, highest being shorts, lowest being longs. And then you can gauge momentum. I'm not really recommending that for a lot of people right now until you get more comfortable with gauging momentum. Like if the market is just straight ripping higher and you're not really getting an opportunity to get in, sure, take this level right here, hop on it, go to town. Most of the time it's not doing that. Most of the time it's a give and take market, it's back and forth, and you just wait for your lowest and highest untested. Now, there are scenarios where your lowest untested in a three-leg continuation is your momentum trade. That's when I'm more likely to take it because our lower levels, our lower failures, and our lower continuations already got tested as support in the move up, and the only thing left is this highest level. So now it becomes your momentum level and your lowest untested. So those trades, yes, I'm taking. All right. Let's see. Let's go over Moxie because this is kind of what I'm talking about with free money. On stocks, really what we've been doing, we do our swing trades. We have our scan for that. Those are slower. Those are long-term holds. We kind of adapted this scanner from StockBee, who's Pradeep, and Christian Kulamagi uses the same thing. He looks at biggest gainers over the last 1 month, 3 months, 6 months, and he does his own thing with that. That's fine. But the key to that is they're looking for momentum, and we like momentum too. So we will take the same scanner, which is valid. It tells me, hey, what's been moving over the last 30 days? And from there, I can find my own setups. Every day, I scan for this at the end of the day. I make my watch list, and then I go through that watch list the next morning and say, what's setting up? On Friday, we found Moxie. So Friday morning, it popped up. It was already on the watch list, like the bigger watch list, but Friday morning it actually gave us new highs, and around 11-ish, 11:30, I think it was 11:20, 11:30, somewhere in there, I flipped through the scanner and I said, hey, to one of my partners, Moxie looks good. And we both instantly agreed. We didn't have to have a discussion about it. It was just, yep, it's got the look. What's the look? It's clean, untested levels. That's the look. We have this leg up here. We broke support right here. So that makes 938 and 916 valid. This is our continuation long. This is our failure long. This is our lowest untested. At 938, I'm paying attention to see if we get a sharp rejection here, because then what's probably going to happen is I'm going to try to get long in this area. Or I'm going to blindly buy 916, stop below 880s, and my target is, since this is lowest untested, is highest untested of this move and new highs. So this was tested. 1139s on a smaller time frame are potentially untested, and 1150s new highs. I don't like carrying stocks I don't know anything about over the weekend, especially not from my longer term swing scanner, which I know have good fundamentals. So this one, we took a lot of money out in this move up. But this is what I mean by clean. This was lowest untested, clean move up, no retracement until here. You can't go wrong. Yes, you're going to get some of these wrong, and that's fine. When I put this trade on, I put my stop in, and I moved on. I went on to do other things. I talked to you guys. I made other trades. I played with my daughter. I did other stuff. Because in the end, you just have to put on the risk and accept it and move on. So I found this from that scanner. Let's see, I can just pull this over here. This is kind of the scanner I set up every day. I take my scan. See if I can pop this out. Detach. So I take the scan out. I've got volume minimum of 1 million. That's why I do this scan a little later in the day, because it's not going to pop up until it's hit 1 million shares. Minimum of $1. Some of these custom codes were handed down from Pradeep and Christian. ADR, average daily range and percentage, lets me know that the thing's moving. And then price change is at least 20% higher than 22 bars ago, which is roughly how many trading days you have in a month. 20% higher is just a cutoff that tells me it's up at least 20% in the last day, so I'm not having to filter through everything that's 10% up for the month. Who cares about that? So I do this list, I scan for that, it pulls everything up. From there, you can save as a watch list, and I'll share the scan with you guys in the chat room. But there, I look at the watch list. And we will change this to green. And from there, you can just use your arrow keys. Now, typically, I have this on a grid. Actually, let me just pull my grid out. Let me just pop it out real quick. Detach. Typically, just have it on a grid here. 1 minute, so I can see what it's doing pre-market. I don't care about pre-market levels. I just want to know where it might open. 30-minute, daily, 5-minute. This is clearly, now BTX, don't get me wrong, we took some good trades out of BTX. We had some solid work here, here. I think there was one in here somewhere that we took. We broke support there. We had a failure long there. So we took this trade, this trade, this trade. That's fine. Who cares that it's going down? These were valid trades. Now we have all this move over here to retrace. BTX might be up 255% on the month. I don't care. Until it reverses and starts doing things, this is not on my watch list. Hertz had a great setup. Don't really see it on the 30-minute here, but I know from this gap down, we broke support, which was here. Let's just zoom in. So I know we've got legs here. This is tested. Resistance broken. This broke it. We broke it there. That activated 29,840, whatever this is. This is tested thoroughly. So while this is a valid level, I'm not trading from here. We zoomed in and we had resistance, support, resistance at 315. Tested here. Went higher. Your goal is highest untested of this move, which really was right here, 405. Came back and tested our 315 again, then hit 405, then made new highs, and more than doubled. Found that off this scanner. Moxie we found on Friday. There were some trades in here. UXIN hasn't had anything recently, but in this move up, these daily big moves and pullbacks, there were valid trades in there. Now it's just kind of floating around. PRPOs had some good trades. We had 386 here. That was a valid continuation on the smaller. See, the only reason I pay attention here is this 30-minute move straight up. The only place we showed any signs of resistance was in this move. So at that point, we want to zoom in. See if it even goes back. Zoomed in. 386. Tested again here. we zoomed in and took a smaller trade. We tested here, broke to new lows, failed to lose, buy 385s again, and then that's the day it just shot up to 5s. Not a big deal. But yeah, you can find a lot of these trades just by scrolling through, and eventually your eyes will be well trained enough to see what's going on there. But yeah, the key takeaway from today, again, is we want to trade from lowest and highest. We want to make sure it's untested. And all of that all depends on making sure we have valid legs in place. Our qualifiers are correct. We've got our 2 qualifiers. Really, you should have 3, but you only need to pay attention to the last 2. And from there, you make trades. Yes, there are more complex things to this. There are details, but most of it can be figured out by paying attention to support and resistance and being very selective about what is tested and untested and what's highest and lowest. That's it. So I'm going to let you guys sit with this stuff for a few weeks. We'll still do weekly Q&A, but I'm not going to do any more like breakdown videos like this until we have some more detailed content. I want older guys and newer guys to watch these first 2 videos and start putting the basic pieces together and start making good trades. From there, we will get into finer detail. You will probably figure out a lot of that finer detail on your own with practice. But I'm here to answer questions. You guys ask questions all week. I'll make another weekly Q&A at the end of this week. Until then, watch these videos, study, study, study. Support and resistance, support and resistance. I will say that until you get tired of hearing it. You will have dreams about it. You'll get annoyed every time it comes out of my mouth. But a year from now, when this clicks in your head and you just know it in your bones, you'll look back and go, man, I wish I'd listened and studied support and resistance in the beginning, because really that's what it boils down to. The rules tell me where to look, but I make my best trades when I pay attention to support and resistance. So do that, study again, study one more time, and I will see you guys in the chat tomorrow. Have a great weekend, guys.